All right, every day seems like chip ahoy for the stock market, right? Even though they started the day with a well-deserved break. You know, the 16-day winning streak from SMH, which is up 31%. When I came down to the studio, they were trying to get up again, maybe 17 days. Although, listen, they could take a break if they want. They still seem poised for further gains. In fact, four chip names are among the top 10 advancers in the session today. Texas Instruments, which had a blowout quarter, along with the other names that aren't household names. Now, my next guest is one of the best tech analysts in the street. Very busy man these days. I want to bring in Angelo Zino, Senior Vice President, also Technology Head at CFRA Research. Angelo, we've got to start with Texas Instruments. Now, you had a hold on this stock. It's one of these boring analog names. It's sort of, you don't hear about it in the newfangled world of advanced chips, but it looks pretty good today.
Yeah, and thanks for having me. So you look at it today, definitely doing better. But to your point, I mean, it has been a stodgy name here over the last couple of years. I think when you look at the move today, a lot of it is Texas Instruments specific. They really kind of spent the last 4 years spending aggressively in the midst of tougher times in the case of their core markets, but they're now easing up on that CapEx spend. Demand is starting to improve. That's allowing kind of margins to inflect positively, free cash flow, profits, all that great stuff. So you're kind of seeing a turnaround here in Texas Instruments business. We think it continues, but to be honest with you, we prefer some of the other smaller analog names that actually have some better earnings potential. A name like Analog Devices, onsemi, NXP. Those are kind of going up in sympathy with Texas Instruments today. Those are the names we prefer at this moment.
I'm glad because I've got subscribers in on. Let's talk about some of your strong buys, though, okay? And these are all familiar names, 3, Mag 7, along with Advanced Micro. What is it that sets these apart that you have them as strong buys even at this stage of the game?
Yeah, I mean, I think they're all very different stories. So, very kind of company specific in nature. But I would say as far as, I'd say of those four, the one we like the most is A&D in terms of the upside potential. There are a lot of CPU bottlenecks that are going on out there, not to mention they're shifting towards these rack scale systems businesses in the second half. So they've got a lot of potential here as we kind of look here over the next 2 to 3 years with a real kind of nice tail end revenue trajectory. And I think Meta is the other real interesting one. That's the most recent upgrade to a strong buy on our end. And we kind of like the fact that they're now starting to see some momentum in terms of their super intelligence labs business. We think the second half, you're going to see a lot of products come on that side of things, not to mention some cost cuts as well as the fact that the top line continues to do very well. So those are the two names I'd say we prefer over the four.
All right, so a lot of things happening here with these software names, right? ServiceNow getting annihilated. And, we talked about this for over a month about, whether or not the SaaS apocalypse, the software names that was done. It feels like today we have to ask again, is this the coup de grace? For software and some of these social media names. Now, here's some of the names that you follow that to me look extraordinarily vulnerable right now. Are you going to stick with these? Most of them you have a hold on, I think, but it feels like they're done. They're done, unless do they have a shot?
So we have hold recommendations on 3 of those 4. We did downgrade Shopify and Trade Desk back in January. The growth stories at this point in time within software are going to be tougher. You can't go with high valuation, which is why we kind of downgraded Shopify specifically, despite the fact that we really like that story still. I say among the 4, Pinterest looks the most interesting, whether or not it could be potentially an M&A target. You've got some nice activist interest there, not to mention a great balance sheet. The others I'd probably just stay away from at this point in time.
Intel's reporting tonight. You've got a buy on it. What are you expecting?
Yeah, I mean, I think the bar's fairly low here for Intel. I mean, despite the fact that the stock is clearly run into the print, you kind of look at how this stock typically goes. I'd maybe say look at 3 things, right? One, obviously the guidance. It's all about attach rates for CPUs. I think they're going to tell a very good story. I think you're going to see some price inflation there. I think number 2, gross margins. The story always kind of trends the way gross margins go. This is a company that historically, or in recent quarters, has said 40 to 60% is the target. It's a wide range. Street's looking at about low 40s in 2027. We think there's line of sight to over 50% margins. So the earnings trajectory is really strong, we think, for this company. We think they're going to tell that story here on this earnings call. And then I think the third thing you have to look out for is clearly the foundry momentum. Elon Musk obviously kind of looking, looks like he's getting in there. We'll see, whether they kind of talk more on that foundry side this quarter. If it's not this quarter, second half of this year, we expect to see some really good orders on their foundry.
That was a huge stamp of approval last night, Elon Musk, during the Tesla call. Angelo Zino, thank you so much, my friend. Appreciate it.
Great. Thanks for having me.
Talk to you again soon.